Hello, this is Brett from Wave. How's it going? Here's a new video on Exxon Mobil, one of my long-term dividend portfolio holdings. So I'm going to continue the series of the analysis of my current holdings in my long-term dividend portfolio. And I'm just going to dig into the Elliott Wave analysis for Exxon Mobil, and then we'll take a look at one of my previous analysis and how it has been playing out. So here we have, let's zoom out. We're on the weekly chart. So from 1970, it looks like we could have had a 5-wave move here in primary degree into the 2014 top at just over $100. So from there, it looks like we've had a 3-wave move to the downside into what could be cycle wave 1 and cycle wave 2. So what that means is that from here we could have a top that could last up till let's just call it crazy upside, but basically this is one move. We've had the correction of the entire move from 1970, and now we could expect much more upside to come. So with that being said, it looks like another confluence with this count is that not only we've had what it looks like a textbook move into wave 2, let's just call it wave 2 for the moment, because we've had 3, 4, 5 ABC forming a head and shoulder pattern, which in a textbook move, that's what happens with wave 3, 4, 5 and then ABC. Not only that, but also wave C of 2, this one, finished right near the area of wave 4 of the 1 less degree, which is another Elliott Wave textbook guideline. So with that being said, we do have strong evidence in favor of this count. Now, let's go to the daily and focus off the 2020 COVID lows. And from there, it looks like we've had a 1, 2, 5 waves up into wave 3, and it looks like now we either are in wave 4 or we finish wave 4 here and we are ready to resume higher. So as you can see here, this red line represents a validation level for this current count. Let me zoom in, where we've had wave 2 here, and obviously wave 2 cannot retrace past the starting point of wave 1, it's right here, and that's why it's a validation count. This green line would represent our wave 5 of intermediate degree, so red 5 target at equality with wave 1, which is a very common target in Elliott Wave terms, equality of 5 and 1. Now, what could happen is we are not finished, we're still continuing potentially sideways, and then we'll be ready to resume higher. I say that because, as you can see, wave 2 was pretty much a straightforward correction. It was sharp, it didn't take much time, and because of the rule of alternation, I would expect wave 4 to be sideways. Now, this is sideways. However, if we fail to hold $100 and break through, we could just see much more downside to come in a sideways manner. I would expect these lows here to hold at around $80, 8 being the strongest number in the market, being a fib number itself, and at that point resume higher to at least $150. And if we manage to do that, then we could expect an ABC, so 3 ways down, potentially to come back here, but we'll see, one step at a time. I'll obviously update you guys, to have wave 1 and 2 of 100 degree, and then continue higher within wave 3 of cycle degree. So that's basically the Elliott Wave analysis for Exxon Mobil. Now let's take a quick look at dividend, just to show you where we're at and what is the company dividends policy has been in the past. So here's our dividend data. As you can see, we have both a trailing and a forward dividend yield of 3.4% at the moment. whereas the year on cost for the past year has been 3.5, and for 3 years been 10%. That being obviously of the 2020 cover lows that we've had, where we've seen the stock going all the way back to $20, and that obviously put the dividend yield on a higher percentage. And then let's take a look at dividend history. As you can see, we've had continuous growth over the past 20 years. We stopped growing with the COVID lows, where obviously oil and energies were peak of demand. But as you can see, we didn't have any cut. Obviously, the share price has had a significant fall, but the company then resumed increasing the dividend payouts, and it is possible that we can expect a raise in the next payout. Last but not least, let's take a look at cash dividend payout for the past 12 trailing months. And as you can see, it's sitting at 32%, so very healthy. And it's also very close to the dividend payout ratio. That being said, the company looks healthy. The Elliott Wave counts just further upside. So what I would expect is, as I said, one more leg higher into wave 5 to then have a larger retracement. Now, as I promised, here one of my latest video on the company NextEra Energy, where I went over the Elliott Wave analysis as well as some dividend data for the stock, and I looked at my outcome. As you can see here, if you go watch the video, I was expecting for further downside to come into this wave 4. And here, if we go take a look at the stock now, we've had a sharp move down as expected. So now we could starting to look for some sort of support to then resume higher. And at that point, our analysis will play out nicely. So thanks for watching. As always, leave a like if you enjoy the content. Please let me know in the comment what you think about Exxon. Let me know if there's any stock you would like me to do next. Thanks for watching. I'll see you in the next one.